Boris Schlossberg, Managing Director at BK Asset Management.
BK Asset Management's Kathy Lean.
Hello, everyone. Good morning. I want to welcome everyone to my live trading session. I'm Kathy Lean, and if you're here and you're ready to talk about NFPs and you're ready to get into developing our trading plan, let's tell me that you're paying attention by giving me a nice green heart, green for money. We're hoping to make some money today. So see if you can find that green heart emoji. I'm going to, and let me know that, you're here and ready to rock and roll. Here's my green heart emoji. Let me know that, you like, that, you're ready to talk about non-farm payrolls and what to expect today. Yes. Okay, great. Hello. I like the broccoli. That works for me too. Anything green. That's what we're hoping for today. And usually with live trading non-farm payrolls, we spend the first, 15, 20 minutes laying out our game plan so that when the report is released, we're going to be able to react quickly and be able to follow the game plan. And that is why, we start so early. So I have time to kind of explain, what I think is going to be the best trading opportunities, what I expect for the price action, and how we are going to trade. So this is wonderful. Now, I always trade. It's kind of going to be split into two segments. Today's live trading session is going to be split into two segments. First, actually 3 segments. First, we're going to plan our trade and we're going to prepare for the NFP report, which is what we're going to do for the next 15 minutes. And then we're going to live trade non-farm payrolls pretty much right off after the data using currencies. I will be trading Forex and maybe about 15 minutes later, 10, 15 minutes later, depending upon, how things settle up, Boris will join us. And he's going to be trading gold indices. I don't know if he's going to trade Bitcoin or not. Bitcoin is, surprisingly down this morning, but he's going to be trading gold as well as NASDAQ, maybe ES, I'm not sure, but he's going to be looking for opportunities closer to 15 minutes, 20 minutes after the report. So the first 15 minutes after the report, we are going to be trading currencies exclusively. What would be really helpful for me, and we can look at gold too, is for you to let me know, what are you trading? Are you trading Forex, or are you trading gold or indices, or a combination, so that I don't miss out on talking about maybe one of those instruments, even though we're going to be focused on currencies this morning. So let me know in the chat what you're trading. Forex, good. Scalping, EU, fantastic. All right, euro dollar may or may not be the trade today, and that's what I really want to talk about. So there's a couple things to when we prepare and we plan for our trade. There's a couple things that we need to talk about. We need to talk about, obviously what is expected, what the leading indicators for non-farm payrolls say, which currencies will probably be the ones that move the most, which ones we'll be focusing on, and probably the most important part of live trading non-farm payrolls, in my opinion, is being able to understand what is the current market sentiment. And I think I'm going to talk about this a few times, which is why you're looking at my dollar yen chart, because I think it's important to, start talking about it and then, come back to it so you can understand it from a different perspective. So whenever I trade, every single day, the most important part of my trading decision is understanding where the market sentiment is, how people feel, whether they are pro-dollar, whether they are anti-dollar. Because if they're going into a huge event risk already leaning one way, that's already kind of their bias. So that, if the data goes there in the way of the price action, we may see an even quicker exaggerated move with very little retracement. If the number goes against market sentiment, how the market feels about the US dollar today, because we're trading US data, even if we get a weaker report, there may be volatility. Unless it's overwhelmingly weak, it may not be a straight shot lower. Maybe it's a straight shot lower followed by a retracement followed by a straight shot lower, or it's a straight shot lower followed by a recovery. And a large part of that is contingent upon how the market feels. So I'm going to give you a little test. We're looking at the dollar yen chart right now. Looking at this chart, do you think, this is a 1 hour chart, that the market is going into the non-farm payrolls report positive dollar or anti-dollar, pro dollar or con dollar? Give me an up arrow or a thumbs up for pro dollar, a thumbs down for bearish dollars. What do you think? Yes. Oh, okay. Thank you for telling me that. I'm adding my chart to the stage. Thank you so much, Santish. You know what? We're going to be looking for our superstar today, because, you know, we always have someone that, you know, adds so much value to our sessions. All right. Dollar up or dollar down? Are we going into the non-farm payrolls report dollar up or dollar down? Thumbs up for up, thumbs down for down. Okay. Yes, most of you, I'm just looking at the chat, which is why you're seeing me go off screen. Most of you are correct. Some of you are a little confused, and that's okay. If you look at my right-hand side of my chart, this is my watch list, okay? This is my watch list that I have up every day. And you can see that the euro is lower this morning, marginally so, but still lower. That means the dollar is up against the euro. It is down against British pound, but, you know, British pound sings to its own tune. It is down against the Swiss franc, so it's a little mixed, but it's up against the dollar yen, it's up against the Australian dollar, it's up against the New Zealand dollar, it's up against the Canadian dollar for the most part. And even if we look at a 5-minute chart, you can see dollar is trying to tick up going into the non-farm payrolls report. So we know that the market is leaning towards something that would be positive dollar. Now, of course, the market could be wrong, but the reason why I bring this up is, for those of you that are just joining us now, I'm going to circle back to this numerous times, is that when we have the market, in this example, buying dollars or bidding up or keeping the dollar strong going into the non-farm payrolls report, if we get a good number, it is just going to fly quickly, easily, with probably very little correction, unless, you know, there's a little bit of ambiguity, because non-farm payrolls is a little tricky because we've got the unemployment rate, we've got revisions, we've got the average hourly earnings. But if everything is overwhelmingly good, it's just going to fly. However, what if it's bad? What if the non-farm payrolls report comes in weaker than expected? If the non-farm payrolls report comes in weaker than expected, because we see that the market is already is kind of positive dollars going into the non-farm payrolls report, then what may end up happening, unless, of course, it's very, very bad, all around weakness, downward revision. I don't think we're going to have a downward revision because last month's number was so bad already, but really bad report, unemployment rate skyrocketing, average hourly earnings increasing, and we'll talk about what constitutes a weak report in a minute. Unless that happens, what could end up happening, because the market's already positive dollars, is that dollar yen could sell off and then not continue. And this is where, or it could do something like this, where, and it wouldn't be that big, but maybe something like this, where it sells off in a knee jerk, bounces, and then sells off, because the market has a current view right now, a current sentiment where it wants to buy the dollar, and it may not want to give up on that. And there are reasons for that. The reason is because the market is still unsure about whether or not an interest rate cut will happen this month. Whether or not, now the odds have moved more in favor of an interest rate cut. Last week was 50-50. This week it's like 70-ish, 75-25. So the market does think that there's a greater likelihood. But we've got this jobs report, And we have next week's inflation report that will really seal the deal and make the decision. So they're not really sure because inflation is still relatively high. And so, so unless it's overwhelmingly negative, it may not be a straight line down. It may just be a little bit up, down, and maybe we get back to here. And that all depends upon how much of a surprise there is. And that's where we start talking about what is expected. So, and then don't worry, we're going to look at what is expected. We're going to pick the currency pairs to trade, and then we're going to lay out the game plan all in the next 8 minutes. All right. So, non-farm payrolls are expected to be very strong. 218,000. 218,000 growth, up from 12,000. Huge jump. Why? What's going on? Why are we going to have such a huge jump? Number one, last month's report was distorted by the strikes and the storms. So the storms and the strikes caused last month's non-farm payrolls report to be significantly weaker than expected. And, that's why we had such a weak number when the last non-farm payrolls report was released. And so it was definitely something that the market was very, very worried about. Average hourly earnings growth was pretty healthy last month. And the unemployment rate actually dropped. So last month we had a very weak number. And this is where this number here is where we could get an upward revision. This could surprise maybe to the downside a little bit. Maybe this would come in at 180, 175. Now, if we're at 200,000 and this is revised upwards, it's good. Even if it's like marginally higher, even if it's 218, it's good enough, I think, to drop those odds of a rate cut from 75, maybe back to 70 or 65. As long as this doesn't drop to 0.2 and this doesn't become like 4.2, 4.3, for example. As long as this is above 180, maybe even 175, in my opinion, I think that that is going to be, good enough for the dollar to extend its gains. Because remember, we started off by talking about how the market was positive dollars already going into the report. It may not take much to drive it up. And believe it or not, if you were trading this day, and the last time the non-farm payrolls report was released was on November 1st. And November 1st, I'm going to go to the 1 hour chart quickly. And you can see the non-farm payrolls number, the headline number was bad, right? The headline number was, let's get rid of all this stuff. The headline number was 12,000. And look what happened here. What could very well happen today, which is headline number is weak. Dollar drops and then rallies and pretty much holds firm throughout the day. One thing I want to point to you to is this. Look at this. This is exactly what's happening right now. Dollar is being bid up. This is last month. Dollar is being bid up ahead of the non-farm payrolls report. Number was ugly. You could not get uglier than 12,000. I mean, there was a horrendous number. Dollar yen drops, but it did not continue. It actually rebounded. It rebounded. And let's see how far we can drill down. 15 minutes is good enough. Just so that we can lay out our game plan here. Because we're starting to build our game plan. But I need to explain to you. I need to give you proof as to why, we're looking at this game plan. So this is dollar yen on the last non-farm payrolls day. Horrendous number. This is a 15-minute candle. 15-minute candle dropped like a rock and bottomed. It bottomed right at the 15-minute candle. For those of you that are joining us right now, here's what the schedule. We are laying out our game plan for non-farm payrolls. I'm going to be trading Forex in the first 15 minutes of non-farm payrolls. Boris is going to join in. Then he's going to trade gold and indices. So we will get to all of that. But right now we're laying out our game plan. Dollars rallying into NFPs, holding firm. Number is weak. It drops 15 minutes. It bottoms out. This is what we have to be careful about today. This is what we have to be wary of. Also, because of this. So every month for non-farm payrolls, I always like to show with you. Hey, Boris, never mind. I hit it. So I always like to share with you my leading indicators for non-farm payrolls, and where the indexes numbers stack up. And as you can see here, there's pretty much as much green as there is red. The market is looking pretty much, the arguments for non-farm payrolls to be stronger and weaker are pretty much the same. Jobless claims were lower, which is good. Jolts increased. There's more openings. These two are probably more important because they don't include the storms and strikes. Because ISM manufacturing index 5-month high, consumer confidence, University of Michigan confidence, both very, very strong. ISM services employment dropped, but not a lot. ADP dropped, but ADP is not really all that great as a leading indicator. Challenger layoffs tick up slightly, but very, very small. And continuing claims tick up slightly, which is also very, very small. So for basically most of the reasons favor a stronger non-farm payrolls report. And it's also important to mention that aside from non-farm payrolls, we also have the CAD jobs data. And so we have the Canadian dollar in play. We have the US dollar in play. And the Canadian data is expected to be mixed. The headline number is supposed to be stronger, but the unemployment rate is expected to rise. And Canada breaks it out between full-time and part-time jobs. So, both of those are important. And we'll be watching both when the number comes out. And we'll see it in the price action before it happens. So now let's talk about which currency pair to trade. This is the Think Capital or Think Capital economic trading calendar. And if you get a Think Capital prop challenge, this comes free and it's very, very valuable. This is the price chart that shows us the volatility for each of the major currencies around that event. So 5 minutes after the event, we have dollar yen 70 pip movement last month, 175 pip movement after that. 1 hour, we have a continuation in dollar yen, much bigger move. I'm going to go a little faster because we are getting very, very close to trade time. Euro dollar, very small move, 40 pips last time, 70 pips the previous time. So if we want volatility, the volatility is going to be in dollar yen. And dollar yen, I think, is really going to be the trade that we're going to be watching. We're going to be trading dollar yen for either whether it's a stronger or weaker report, because this is the one that's really going to move. If it's a stronger report, we're going to be buying dollar yen. If it's a weaker report, we're going to be selling it because we're so close to the indicator line on my zip chart that we could twist the sell point at any point. But I'm also very keen on dollar CAD.
Okay, sorry to interrupt you. I just wanted to let you know that if you press the calendar button on your trading view, go all the way down, you see the little target on all the way to the right edge, and then all the way to the bottom of the screen, there's also a calendars icon all the way to the bottom. All the way to the bottom.
Okay.
If you click that, you'll get real-time news. That's why I'm telling you to hit it. Hit
all right. Also, by the way, Cyber Monday codes are no longer valid, Boris, just the regular 10% code.
Yeah, I know. Unfortunately, I just I
don't hit it up. Okay. So we're going to trade dollar CAD if it's a good number for the US and a weak number for Canada. And then we also have euro dollar if it's a bad number because the market's already, we'll trade euro dollar depending upon how things go as well. So let's just give the market 10 seconds to decide, and we will decide what we're going to be trading.
You can move that over like that, compress it a little bit.
I need the dollar yen. Okay. All right, so it looks like it's a weaker number, but how weak? So 50. Wait, hold on. That's not the right number.
Average hourly. These are all numbers. These are all numbers.
Where's the non-farm payrolls? 200,000, 220,000. That's actually pretty good. I'm getting really confused by this calendar.
Its full-time employment came in at 54, average hourly 34.3 against 34.3. It's all essentially in line.
Unemployment rate increased, which I don't even see where unemployment rate is here. All right, this is distracting me. So unemployment rate increased to 4.2%, 200,000. And then where's average hourly earnings is
334.3, same as
right, I can't look at this. This is just way too confusing for me right now. Sorry, it's just like last minute. All right, so we've got earnings higher. Okay, this is a good number. All right, so I like dollar yen. So non-farm payrolls 227,000, unemployment rate up, earnings up. And then so I like dollar yen, but let's just double check the Canadian data. Let's see if we have the CAD data. The CAD data was 50,000 employment change, which is also good. Sorry, I'm just really thrown off my ball, Boris, because we were staring at that calendar. We're going to look at the CAD data and see where the CAD data is. I can't even see the CAD data.
You gotta scroll down. All right, just go back.
All right. I mean, I don't even know where here it is.
You have to learn how to use it.
Full-time is 54,000 and unemployment is 50,000. So it looks like it's a good number. And I can't even find the Canadian unemployment rate.
You had it on the other one. You had to go to Forex Street.
Right,
it doesn't matter. Nothing seems to be moving much. So
okay, so let's look at CAD yen. So CAD yen, so it looks like looks like employment change was very strong for Canada. Unemployment rate increased a lot. Average hourly earnings. I think all of this is good for the dollar. So we can see that the dollar is not moving up right now, but we're going to give it a minute and see if we get any opportunities. I like buying dollar yen. Let's see what dollar Swiss is doing. Maybe dip our toes here, 150.24 to see if we get any upside. So we buy at 150.24 because the number is good. I'm not sure why it's not moving in that direction.
I think it's relatively in line, but that's actually good because I think the whisper beforehand was people were fearful that numbers could be weaker, especially services. Services ISM came in weak, so I think on the U.S. side, people were afraid that we could have a much more volatility. The very fact that we're printing 200,000 is still very positive for the economy. Equities are acting better. NASDAQ popped up like 60 points right now.
So we're going to have a 20 pip stop, 20 pip target. If we get stopped out, it's fine. You know, we do have to respect the price action. That's why I'm not going too all in on the trade, because I don't see anything really all that negative about the report. The headline number was better. The earnings was better. We had upward revision. Unemployment rate is the only thing that's a little weaker. So we are stopped out on dollar yen, but it's okay. You know, we're going to give it a minute. We're going to wait and see. Euro dollar.
All the rates.
What?
How are rates? Are rates
rates are moving down a little bit. They're down half. I still like the dollar yen upside. Maybe it's just taking a little time right now. What's dollar CAD doing? We have good CAD data. We have good US data. Maybe let's look at our short-term charts. Now it's bouncing. So I think maybe CAD yen. Let's just double check on the CAD side. Yeah, CAD yen 160. Let's see, the 15-minute chart looks still bearish. I want to see a little bit of signs of stabilization. Yeah, 160, 80. I'm not pulling the trigger yet. Just give me a second. Yeah, 85 is a good level to get in. Dollar yen still looks good. It's, you know, our stop pretty was probably a little bit too low, but I think, as I said, the number is not bad. And I think that it should all, you know, start to peter out. So I still like the dollar yen trade 160. We're in CAD yen right now. 160.20, 6.25. It still looks good. So the thing is that we did get stopped out of the first dollar yen trade, but what you can see is that it's, you know, it went down for no real reason, in my opinion. Because none of the reports were bad. Yes, the unemployment rate increased a little bit. The household survey seems to be a little weaker, which is what the unemployment rate is calculated on. But all the other stuff isn't bad. So the question is, does it really affect the Federal Reserve's rate cut plans? And the market seems to think it may, but I'm not too convinced. We have 3 central bank rate decisions next week. We have the European Central Bank, the Bank of Canada, and the Swiss National Bank. I'm just looking around at my charts right now. All three are expected to cut interest rates. So we may get a little bit of a bottoming out in dollar Swiss here, because the Swiss National Bank is expected to cut interest rates. So we may get a little bit of a bottoming out at dollar Swiss, as well. So keep an eye out on that. But right now I'm just, watching dollar yen and CAD yen. Maybe it'll work, maybe it won't. We'll see. As for gold, gold seems to be moving. It's kind of unchanged. It hasn't really been moving up or down, but looks like it wants to press a little bit lower, which would be consistent with a positive dollar bias, but we're not necessarily getting that right now.
The other fundamental positive is that October revised upward by 24,000 from 12 to 36. SEP revised upward by 32,000. Those are generally, I think, positive data points. And sometimes the market takes a while. There may be a little bit of profit taking, but I think as the day develops, the bid in the dollar probably starts to develop as well. So.
Yeah, I actually like this long dollar CAD trade. Looks pretty good at 140.60. More than the CAD yen trade. I would flip out of CAD yen into long dollar CAD, see if it is able to hold this 140 45 level, because we do have the Bank of Canada rate decision next week, and the Bank of Canada is expected to cut interest rates. So maybe this will hold. So maybe this could move up. I'm not loving the price action. Sometimes we get really good trades, sometimes, not so much. But I think we're just going to be patient and see what the market gives us, and see if we get anything in dollar CAD, CAD yen. I mean, these are the trades that I'm looking at: dollar yen, CAD yen, and dollar CAD. Although they're kind of contradictory, but I think we'll see what happens with these setups. It's hard to be long euro dollars, even though it is rallying going into ECB, when they are expected to. They could potentially cut interest rates by 50 basis points. So we'll have to see. Is the Fed more likely to hold rates? Well, what's interesting here is that the market is now pricing in a greater chance, 87% chance of a December rate cut versus 75% chance after these reports. So they do seem to think that the odds for a rate cut has increased. But once again, I don't feel like these are bad numbers. If you want to ride the flow, euro dollar is rallying, dollar CAD seems to be holding firm. What could be interesting is maybe euro CAD to the upside, but that's already kind of run up a bit, because we've got the CAD data, we've got the euro data. Yeah, that's already had a huge run there. But that's,
You think euro's popping because of short covering, just because it's been so oversold?
I think there's short covering, and I also think there's seasonality. Euro has very strong seasonality to the upside. If we look at this, let's pull up euro dollar again, and we bring on let's get rid of the indicators, and we add in the seasonality. You will see. And we talked about this on Monday. I encourage you all to join me on our Monday live streams, because we talk about some really cool stuff. And one of those things is how we brought up the seasonality in eurodollar. And look at this: 1, 2, 3, 4, 5, 6, 7, 8, 9. 8 out of 9 months, eurodollar rose in the month of December. Only 1 month it fell. And in that 1 month, that decline was nominal. So it wasn't much of a decline either. So euro has very, very strong seasonality. Gold actually has very, very strong seasonality too, in the month of December. In the month of December and in the month of January, but more so in the month of December. Pretty much 7 out of the last 7 years, gold prices have risen in the month of December. So all of this is suggests that gold could hold, and then also that explains the strength that we are seeing in the euro dollar. So unfortunately, the trades aren't giving me anything, which happens. So we'll kind of be a little patient. The only thing now is to wait to see if any of the news candles, let's see, let's remove the indicator, and let's see if any of the news candle breaks. If we break we're breaking below, if we break this low, we could end up, seeing more downside in dollar yen. And maybe, I'm just wrong in interpreting. We got to respect the price action. We've got to respect the price action. Dollar yen wants to fall. And, we'll see, if it actually ends up doing that.
Speaking of gold being bid, gold went positive trend, almost at like days high right now. I'm trying to buy the dip in gold. I have a bid in at 2, and I'm in at 262.2 on the gold position. A little bit too early, but I kind of wanted to get into the trade, see if gold has some continuity to the upside. So we'll
Do you want to show your charts for us?
Yeah, hang on a second. Let me change my screen here. I just want a sec. So very small, guys, because obviously, if it's not working, we'll try to come in at bigger size underneath here, because there's a lot of support here. I came in too early. I wanted to be underneath this moving average, but you can't. Beggars can't be choosers right now. And again, I'm trading very, very small right now on the position to give myself ample opportunities to repair this trade if we need be. I'll talk a lot about. I improved the scalper. Remember, we talked a lot about using.
Well, I think there's a lot of new people, so I don't know if they know what the scalper is.
Yeah, well, I don't want to talk over your stuff. I want to get into my whole trading. But if you guys, since Kathy is quiet, this is a good time to maybe show. Let me, if you guys don't mind, I'm going to try.
On my end, it's clear that the dollar is selling off. So it's clear to me that now the dollar trade is going to be to the downside. So the real opportunities is maybe going long, going long euro dollar because it's so positive, going short dollar yen. I still like the dollar CAD trade to the long side, but I think it's clear that the dollar is moving lower and Kiwi dollar is zipping buy, dollar yen is zipping sell. So I think we have to respect the price action and, just kind of flip the trade and see if we get any more downside there. Because if we're wrong, it's clearly just two-way action in the markets right now.
Okay. Well, while Kay tries to flip around her trades, I'm going to, let's move off the gold position. Let me just let me see if I want to. Okay, I'm going to try and get a little bit longer gold first right now. Again, very, very small, and then we'll trying to see if I can get somewhere around here underneath the 60 on the support level. If gold really starts to sell off hard, the support will be here in the 55s. So I'm perfectly happy to come back into the market. All right, fine. You want to trade with me? Let's trade with me. Okay, let's do this.
So I'm just still long dollar CAD and waiting for any, clear signs of setups in the other pairs. And I'll let you know in the chat as well.
Okay. All right. So we'll drop below the 200 SMA. I'm kind of dropping you guys into this again, tiny gold trade. I'm trading small. Obviously, post event here, we don't want to get large. We want to give ourselves ample room to repair this trade if we're completely wrong on this thing, because I do think we're going to find some support over here. Gold everything seems to be doing like a knee jerk up, knee jerk down for a little bit. Equities also came off the highs a little bit. Sentiments, it's Christmas time, sentiment kind of weak. Nothing here on the funded side that radically moved the market. So price action going to be very, very choppy. We're going to try and surf the chop the best we can here. Okay. Oops. Hang on a second, guys. So I'm going to try and get larger now if I have to. So I'm trading micros. I'm finally going to move into the minis if I have to, but this is sort of my last attempt at the micros on this trade. And then I'll try to get serious on the minis if we can come down into the support level over here. But let's see what the micros are. I would get resolved if it comes up to the 259s. I'm just gonna watch this trade, and then once we're out of the gold trade, one way or the other, I'm gonna talk to you about the cool changes I made in the BFF and explain to you the BFF scalping indicator, and how it's gonna make it a lot easier to be able to use my money trade, the really high probability trade that I like to use every single day, which pops up. I was looking at the instruments, pops up at least once an hour, sometimes twice an hour across 3 different instruments. So it offers about 10, 15 really great opportunities throughout the day. And there's just a couple of nuanced things on the chart you'd need to be aware of to make it really viable.
Yeah,
Right.
so now we do see 85% chance of a Fed rate cut this month. So, I may have a view, the market thinks is a different view, and I think that we have to kind of respect that price action.
Ironically enough, that should be helpful gold. And even though gold is selling off right now, maybe a little bit of profit taking, but ultimately, if there's a cut in the rates, gold benefits tremendously when rates go down, because gold is a negative carry trade, so it becomes cheaper and cheaper to finance gold. So you would think gold would pop, but right now price action really trying to sell off a little bit here. So we just have to be patient and try to stick with our strategy. Okay.
So meanwhile, the $1 CAD where we had the clear zip buy signal is the one that's really, kind of pumping up to the top of this range here.
Wow.
Fridays are interesting. Fridays oftentimes has, very significant continuation. Now, if you're already in profit, you can maybe lock in 10 pips and then see if it will drive past it. But certain days we don't have continuation. Certain days it just stops at resistance. But in my experience, Fridays is not necessarily one of those days. Fridays is a day where we oftentimes have more continuation than not. But we went long at 140.60, and it's pretty much came within a pip of target. So, if you want to take that profit, you can. I do believe, though, dollar CAD likes to run for the round numbers. So I do believe dollar CAD will go all the way up to 141 if you want to hold it all the way to that level. I think that it could get there on, a big day like this. CAD yen is finally working, obviously because of the CAD weakness as well. So, we went long at 64, I believe, and it's kind of finally moving a little bit in that direction. But it's clearly, I think my call for dollar CAD running up to 140, let's see if there's any resistance up there, is probably the one that's really going to 141 is the big round number. There's a little bit of resistance at 140.98, which is this high, 89, which is this high here. But dollar CAD is one of the pairs that really likes to run for the round numbers. So I think it could get there.
Okay, I'm watching the gold trade. It came within a couple of ticks of my profit, came off. I got my finger on the trigger if it comes down, because I'm going to get larger now in bigger size here underneath here, looking for the support underneath here in the 255s. We'll see if it's necessary. Might be if it looks like it wants to run those stops, but my trigger finger is my fingers on the trigger right now. Okay, buy. All right, I'm long 4s now, and if it drops again, we'll get a little bit longer here, but we have to, you can't hesitate on our plan. Got to make sure that we execute it properly, so that if we get the good fills, where we should be in there. So this is the double bottom support here, where I think it should have a general chance of holding. So I'm going to wait patiently. At this level, I'm going to have to, if it breaks down, I'm going to wait until I get a green candle before I commit to the next trade, because now it's getting a little bit larger and I want to be a little bit more careful. But let's see if we can work this out. Wow, gold is really dumping. This trade is just totally unwinding, doing a full UE here. Okay, let's wait. Now we're going to have to just wait a little bit, give ourselves some confirmation that there's a little bit of a bottoming here. Okay. I should have pulled the trigger right there because it dropped right into the stop and came back up. Let's see if this works out for us. You see, it made a total clean, drop over here and came right back up. I should have bought the dip over here on the stops. Let's see if they want to run it a little bit counter trend here at this point. And then ultimately we're going to get a little bit larger, and then we'll see how that works.
Okay, so we're out on my end. I mean, I'm out of dollar CAD, but like I said, I do still think it's going to go up to 141, and we'll watch together if it goes. Oh, now it's going. Look at that. And of course, you don't want to go right at 141. I think pretty much 140, 90. What's this high here? 89, right? 140, 95 is probably right ahead of the resistance. CAD yen is now 106.50. CAD yen has support down here at 106.44. But if you are short CAD yen, you may want to maybe grab some of those pips back from earlier. I do think that I do think that these have a little bit more juice to run.
All right. I'm still patiently waiting in my gold trade. I'll let Kathy, keep the charts on Forex. I'll update you on the gold as I'm watching it on the side. And then, in a little bit, we'll take over the screens. We'll start looking at NASDAQ and everything else as we're trading. But, for now, we're just holding the position, trying to see what the market wants to do.
Now with Forex, you can see this is kind of exactly what, you get where's the 830 candle here?
All right. I managed to resolve this trade and totally rescue this trade, as you guys can see in the last minute. But it took a lot of work, and it was.
Yeah, let me show your chart back. I don't know what you're talking about. Go ahead. But CAD yen's already at target.
My chart. Am I not on the charts?
Now I added the chart. CAD yen's at target. So plus 20. That's working.
Wait, my chart is showing. You're not showing your chart. Show your chart.
I changed it to your chart.
Do you want to change it to yours?
Yep. Give me a second.
Okay.
CAD yen is, it's doing, CAD yen's dropping 106.38. This is support. I would be out here if your target hasn't been hit. And clearly, the dollar is slipping. So, I think still the short dollar trade is the one the market is riding. And I think dollar yen could come down to test, 107.60s maybe. Remember, dollar yen likes to have big moves off of these data. We saw from the numbers earlier. I like maybe selling euro yen. I think that could go lower from 159.01 because the ECB is expected to cut interest rates next week before the Fed. So 159.01 is, I think, the kind of the last trade that perks my eye. It is selling into weakness. I would like for it to retrace a little bit, but I'm not sure we're going to get that retrace. I mean, retrace would be maybe we look at the super short-term charts. 159.10 would be a good price to get into euro yen if you're giving that opportunity. But just a kind of general direction is what I like. But we were able to repair some of our earlier trades with that really nice CAD yen move lower. And then the dollar CAD also rallying to the upside. So yeah, euro yen is the one that I'm watching right now. All right. Go ahead, Boris.
Okay. Well, I'm just waiting. Are you in the trade now, or?
Yeah, I am. I'm going to type it in here. Hold on.
Okay. So just to brief you, we'll watch Kathy's chart because we'll go back to my chart when we have a little bit of breathing space, and we'll have half an hour before market opens, so we get a chance to talk about the BFF indicator, the new version that I just put out that's going to make it really cool to trade divergence. And also I'll discuss how I repaired the gold trade. It was ugly. I'll be honest with you. It was utterly unnecessary to have gone so deep into the hole to try to repair it. Repair it, nevertheless, we did, which means that, I am within a couple of $100 of 255. Remember, we started the week at 250,000 or 251,000. And my internal goal was to see if we could get to 255,000.
I'm sorry, what are you talking about, Boris?
On our Apex account, which we're trading towards the funding target.
Is there something to show us on that? Because I know that many people don't know where you started. What is this 200,000 account? We have a lot more people than we normally do.
Yeah. We'll talk about that. We will talk about everything when we're done with Forex. I just don't want to get everybody confused with a million different things and bombarded with different information. But for those of you who are new,
hold on, Boris. We're ready to plus 10 in euro yen if you want to get out. Plus at 89, I think, we take those pips. I do think that euro yen could slide down to 158.80, but don't be greedy with this trade. All right, I am done.
Okay. All right. So one of the cool things, it just kind of lets you deconstruct Kathy's trading, because I was watching her from the side. It's always easy, when you're an observer rather than a participant. The cool thing that Kathy does very well, and that I really, really appreciate, is she's very flexible in her approach. She had a plan. The plan just simply wasn't working out. The price action did not confirm her plan. And instead of trying to, be stubborn, she changed her plan. She, she found the right instrument to trade and was able to recover, which is very, very valuable as a skill set.
I will have to admit that I should have flipped sooner. We should have, and sometimes it takes a little bit. We should have basically, we saw that the market was not responding the way I thought fundamentals should indicate that it should respond. And so we really should have shifted the view sooner. We did try to get back into dollar yen, and that didn't work out. And that was a clear sign that the market is turning very bearish dollars. Yields actually didn't move at all. I mean, yields are still just down 0.5%. So it really didn't move that much. And so, I actually believe that I should have flipped sooner, but thankfully we did flip. And the flip trade is I still think dollar yen, we were looking at down this region for support here. I still think it's going to go down to this region. We're not far from there, 66. Euro yen, we're going to get down to this region here. Dollar CAD, went up to 95, pretty much exactly where I told you it was going to stop. CAD yen was the right trade. This is an example, which doesn't happen often, where the data, in my opinion, with CAD data was good. The US data was good. Market didn't care about it at all. Market ended up selling it completely. And we just got to jump into the trade. And, it takes a little bit, because, I'm human. I have a conviction. But when the conviction shows me, when the market shows me that my interpretation of it is not correct, we've got to jump back into the trade. And at the end of the day, really just sticking to this zip sell signals, the smooth zip buy signals, maybe waiting for that to close, ended up being the right ones. And so usually on Fridays, like I said, we tend to have very big moves. So, and we saw on the Think Trader calendar that these moves can be 100 pips easily. And we are, over 100 pips in range in euro yen, and also pretty much in dollar yen. And that's basically what we can expect. So I think, maybe we'll have more room on euro yen because ECB is expected to cut interest rates next week. And also the Fed is now thinking that they're going to cut more. I went to CAD yen because the BOC is expected to cut interest rates next week. And that's the same story with euro yen. And the CAD has been weaker than the euro. So, this one support is not until, like, I would say over here, or maybe not, maybe the round number 106 even. So this one definitely has more room to go lower. Did any of you take the short yen trades and maybe able to get into those moves? If you did, give me a green heart. If you didn't, give me a thumbs down or something like that to let me know which
why a green heart
trade. green for money.
Green for money. Okay.
We started
All right.
with green this morning. We had lots
All
of
right.
green.
I thought you were turning Irish for a second.
Now we were
Okay.
hoping for some profits, and so we were giving green hearts. So let me know if
give her a money emoji. Give her that money emoji if you made some money. And if you guys traded gold with me and were able to repair it, give me a money emoji too. I'll go through the gold trade and we will deconstruct everything. There's a really interesting comment from Hans, which I'm going to address. I don't want to put it up on the screen just yet because it requires a long conversation. So I'll be happy to get into it. But otherwise, pretty good. Listen, non-farm payrolls sometimes can be a real dud. Sometimes they can be great. The markets are. The beauty of the markets is they're never 100% predictable, right? Sometimes fundamentals work, sometimes they don't. The cool thing to sort of, I think, understand from today's session is that when the data is good, but the price is bad, the opportunity actually becomes really valuable the other way. You have, from a trading point of view, Kathy always says, we are traders first, analysts second. That's a really, really important point. If the price action is completely refuting the funda, there is an opportunity there because a lot of people are very much on that other side of the market, and they're all getting stopped out. So there's a lot of momentum that goes your way, which is exactly what Kathy did. She kind of flipped around and said, oh, if everybody was thinking good, it looked good, and now they're all wrong. There's going to be more carnage, and I'm going to take advantage of that. So which she did, which is really, really nice.
And CAD yen continues to be moving lower. Dollar yen hit that target of 106.60 that we laid out from the zone here. So I don't think we're going to have much more. I think maximum maybe over here to the 50 level, but in my opinion, I think dollar yen is almost done. CAD yen could slip. We're still looking at the 106 even level as the target of CAD yen. We've got the New York Open coming up in about 30 minutes. So, that is could change things around a little bit.
So Vincent's comment is interesting because if it's true, I think it will start reflecting itself in those charts, in those support areas where Kathy has it. In other words, if this was a short squeeze and people were just simply doing a rug pull, I mean, just flipping, taking the stops out of the longs, those stops are pretty much going to be exhausted, and there's going to be some support area here. And if it's true, they're going to try to want to rally. If there is something much more fundamental about the view, what's interesting to me, Kay, is how the markets really convince themselves that the Fed is cutting. Like this, they looked at this data and they said, yeah, it's good, but it is absolutely almost 100% convincing that the Fed is going to cut more, which I found interesting. And I guess maybe the markets are just seeing that it's weak enough that rates are going to go down. And that's true. That's definitely going to be short-term negative for the dollar. And maybe that's why we have the fund moving the other way, because that's really what it's all about ultimately, right?
Yeah, it seems like it. I think that maybe they were bracing for a much stronger release.
Yeah.
The uptick in the unemployment rate, it was a clear uptick in the unemployment rate from 4.1 to 4.2. I still don't think the number's horrendous. The household survey did deteriorate, but once again,
all of that is in the service of the really important variable, which is rates, right? And if the market thinks rates are going lower, ultimately that is the one thing that drives the dollar lower, because dollar becomes a lower yield play. And so all of that probably fundamentally actually becomes a negative fundamental trade in a sense, because ultimately that's what's weighing on the dollar. Maybe that's what's going on really here. It's a combination of short squeeze and maybe a realignment of understanding of where rates are going to go. Remember also, just sort of the other thing, Trump loves low rates, right? Trump wants the Fed to cut. So the enormous amount of physical pressure and political pressure that there'll be here on the Fed to continue cutting rates, that's all mildly negative dollar. People, came into when Trump was elected, everybody ran into the dollar thinking that it's going to be a strong dollar trade on emotion, on tariffs, on all those things that are just rhetorical. But when you look at action, the first 2 years of Trump administration in 16, 17, dollar saw a 10% decline. Trump is a mercantilist. He wants a lower exchange rate because he wants to export as much as possible. And if you sort of take that position in a longer term point of view, then a strong dollar position, not necessarily the right one. The market may be completely misaligned. And then we're starting to see maybe just the beginnings of that as the data develops. So it's worthwhile to keep all those things in mind as the year comes to a close, new administration takes hold. And themes may change. Themes may be completely different from what people think they are. So market is leaning into a December rate cut because of the lower unemployment. Yeah, I think you're right. Unemployment rate, and also employment increased, but the actual amount of people being employed declined. So that's ultimately, when you look at that is a reason for the Fed to cut rates further. So yeah, all of those reasons are pretty accurate. Anyways, great reactive trading today to what was a pretty difficult read, and Kathy ultimately got the read right, got the market right.
Yeah, we have a lot of event risk next week. So make sure you join my Monday live stream, our Monday live stream, where we kind of prepare for the week ahead, because we have ECB, Swiss National Bank, we have the Bank of Canada, we have the US inflation report. We have so many things going on next week, Australian jobs report, that we need to talk about. We need to talk about, how to prepare for the trading week, because we've got so much going on in terms of, and I think we also have the RBA. So we have 4 central bank rate decisions, along with the US inflation report, the Australian jobs report. There's going to be so much to talk about on Monday about how to trade in the week ahead and how to plan, what to expect for each of these events. That, Monday at 8:45, I expect.
Okay, you're not showing your. Oh no, never mind. Is that?
No, I'm not showing anything.
Okay, sorry.
We haven't put the event onto the live stream calendar yet, which we will today. But make sure you join us for our 8:45 Monday live stream, because we're going to talk about the ECB, SMB, Bank of Canada, RBA, the 4 rate decisions, who's expected to cut, how much, what does it mean, along with the US inflation report. Also, just so you know, there's something really exciting happening next week. We're starting our 12 days of Christmas, campaign.
12 days of trading.
12 days of trading, not Christmas. That would not be correct. But 12 days of trading, where we have a lot of exciting things that we're going to be sharing with you, a lot of opportunities to win, and different things at BK. Also, prop trading accounts, lifetime access to Zip. So definitely keep your eye out for that, because we're very excited to share our 12 days of Christmas.
Yeah, every day we're going to give away something new, something interesting, something valuable, or discount something at a ridiculously low price. So please, come to all the lives. We're going to feature this in all my lives. We're going to feature this in Kathy's live on Monday, and keep an eye on it. Everybody can participate. You don't have to be a member of BK to participate. Anybody in the world, but get your friends to participate. It's a free giveaway to the world. So there's no obligation on your part to do anything except just participate in the raffles, and it'll, hopefully you guys will really enjoy it, and more importantly, hopefully you guys get some really cool benefits. We're going to give away $100,000 prop accounts, $50,000 prop accounts, flash trader stuff, courses, just a million different interesting things over the next 12 days into the holiday season. We thought it'd be a lot of fun. The market's slowed down at this time. Trading kind of grinds to a halt. So this is a great time to recharge, get some tools, get yourself all set up for New Year. And we thought this would be a fun way for us to give back for all the love you've shown us. So hopefully you guys will really enjoy it.
All right. So let me move it to Boris, who will, continue with live trading.
Yes. Okay. Awesome. Thank you. Thanks again, Kay. Have a great weekend. Everybody enjoy. I'm going to grab the screen here.
Join me Monday. We're going to have so much to talk about, everyone.
Yeah.
So make sure you do that.
Exactly.
What happened to you, Boris? Why aren't you showing up in the
at the stage? Oh, because sorry, it's only one person can take the screen. So I took my screen now. So thanks, guys. Bye, Kay. It was really nice having you trade. We will see you later. And everybody say hello to me. I'm going to run you through everything. that we do here. All right. Hi. So much fun. A lot of people, there was a comment here from Hans, a very, very common, let me find it. It was kind of far back, but I want to hear this. Hans, he says, why are you guys fighting? Right? Because I'm gonna feature the gold trade and explain to everybody why I do what I do. The short answer is because I win, but the long answer is because the conventional wisdom is almost always wrong. The kind of conventional wisdom techniques that people teach you in trading are almost always wrong about making money. So hopefully you get a chance to see how 30 years of the school of hard knocks and being in a lot of professional firms has taught me how to trade totally differently from perhaps the way you guys have been taught. So let's talk about the gold trade over here in terms of what I was doing. Our strategy is, and the key component here is, we had a upside signal, and I'll be the first one to admit to you, it was a weak entry. It wasn't a great trade. I just took it because really I took it because I wanted to get you guys into a position, and it was not really a well thought out position. So I'll be the first one to admit this was not a great selection trade. But once you're in a trade, right? Once you're in a trade and it's mildly to your specification. So this was a upside trend. We had a big gold breakout. I bought the dip below the moving average. I bought it a little bit too high. I bought it over here, right? What you are doing is you're committing to a plan that believes that this is a double bottom and there will be some kind of a bounce to come back from, right? And you have to just categorically, because the market doesn't give you a chance to confirm and wait and make sure you're going to be profitable. The market doesn't give you a chance to think you're going to be profitable. You either pull the trigger and believe in your plan, or you get killed as roadkill by not reacting fast. So what I was doing and what I do with you guys live all the time is, I'm in, I got blown out, I'm in again, I got blown out. I had 4 chambers in my gun. I went down to my 4th chamber, effectively to this one, which was, buying the bottom support. I didn't even do that great a job because, live trading, I wasn't really focused. I should have been buying over here, but I bought it good enough that the whole thing completely repaired, bounced back all the way over here. Actually bounced back much higher than I thought. And the bottom line is that the account, which I said to you, I'm trying to get it up to 255, right? We brought the account here to 254.8. I'm $200 away from it. Here's my trading for the day. Let's see if this thing's going to show up. Sometimes it doesn't show up. Yeah, it doesn't show up here. Tiny little profit. Had a big drawdowns for the day. But if you look at my week, which is the key thing, that's been a very, very nice clean week to the upside, and that's all I really care about. I want to try to make about 2,000 a week. I drove it up. I acted to my plan, and yes, you're going to get sharp cuts here. You're going to get sharp cuts, and if you're not confident, committed in your plan, you're going to get killed. But the point is they recover and recover, and I make fresh highs. So the answer to your question is the reason I do it is because it's part of my strategy. It's not something that we're just doing willy-nilly, that we're just doing without any thought or pattern. So hopefully that makes sense to you, and it's clean and clear. Now I want to clean this up and talk to you a little bit about, before we get rid of this, get rid of all my trades, and actually get bigger here. Well, you know what? Let's do it on NAS. Talk to you a little bit about what I've done with the indicator that really will help you do what I call the money trade. Really help you with the money trade. So I'm looking at to see if NASDAQ would be the right choice. No, it will probably, like, let's say over here. Here's, here. I can't find any good examples, honestly, because, okay. Well, let's talk about what my indicator does, what it's supposed to help you do, how it works. You guys feel free to ask me any questions you have, because we have about 15 minutes before the market opens. We're not going to trade. These 15 minutes before the market opens are always too volatile or too unpredictable for us to initiate positions, so we're not going to trade them. So it'll give us a chance to kind of walk everybody through all of the cool stuff that we have here as a tool set. And by the way, if you want the tool, first of all, let me hang on a second. You want to? I always encourage everybody, of course, to trade with my friends at Apex. Let me put that up here. Let me put the link to those guys. And then if you want to join us, you can join either my coaching or just simply join us for a month, and you're going to get all of these tools for free for you guys to try out and enjoy. So my scalping tool, which is now 2.0202, second version of the tool, comes with trend, reversal, and now divergence indicators, which is really, really cool in terms of understanding how things work. Very, very simple structure. The red line is the long-term moving average 200 period SMA. The blue is 8. Why is it 8 and 200? It doesn't matter. It's just a short-term and a long-term average. All we're looking for, are we in positive trend to negative trend? We're obviously positive trend over here, right? The second thing we look for, the second thing we want is how wide is the trend? When the trend is nascent, when the trend is starting, that's exactly where we want to be. We want to be at the start of the trend when the moving averages are just starting to separate, because this creates the cheapest, easiest, highest probability trades, and in terms of trend. Once moving averages get really, really wide, the possibility of a roller coaster back down increases exponentially, right? So we want to be buyers somewhere over here. Now, there's two ways we can buy. There are two ways we can buy. If you're a momentum trader, if your personality is, I like to, go with the crowd. If there's flow, if people are buying, I'm going to join the buyers. I'm going to join the sellers. I feel very comfortable being in the crowd and trading with the crowd, because I'm a total trend trader. That's your personality. You are looking to trade the momentum labels, which are green, right? And so anytime you have a green label in an uptrend that gives you an H, telling you that it's a higher high, that's your signal. That's your signal to the upside. Now, in this case, this signal, for example, fails, right? You would get stopped out on this signal, and then you try to take the next signal over here, and that signal, of course, succeeds quite nicely. These momentum signals basically are the green signals. The counter signals in trend, buying the dip in an uptrend, is shown by the purple labels. Now, what that means is that they're taking short-term profits in an uptrend, and I want to be buying when they're dipping it. So I'm much more of a counter trend trader. I'm very, very happy to buy the dips. But again, I want the dips to be the higher dips. So I want to be buying here. I want to be buying here. I want to be buying here on the dips, because that gives me a stronger conviction of the value of the dip, right? Now, it really doesn't matter what kind of a trader you are. One interesting variant, which I'm playing with, which I think is certainly legitimate, because the beautiful thing about this indicator is just you can use it in so many different ways, is what if you're like a half and half, you like half and half in your coffee. You're neither a full contrarian or a full conventional trader, trade with the crowd. An interesting variant on this strategy, in my opinion, is to take the purple signal, like the 6H over here, right? Here's my 6H. And actually wait until you get a green candle confirmation. Now, in this particular case, it kind of drips down. So this is all obviously pre non-farm payrolls. So it's completely immaterial. A better example of this structure might be somewhere over here. So here's an H signal, right? Instead of jumping blindly, which I like to do, I'll jump blindly, and if I get stopped out, I'll jump blindly again until I eventually make money and repair myself. A more nuanced approach, which I'm always open to more nuanced approach, is to say, okay, I got a dip. Let me find the first green candle. Let me find the first conventional move in the direction that I'm looking to do, and maybe enter over here. That certainly saves you one stop out. You coming in at 502s, boom, boom, boom. That resolves nice and clean for a 10-point trade. Similarly over here, you have a dip, right? You buy over here. That's a pretty good entry. But then if you just wait for the green candle over here, you're not far away from the entry, and that definitely gives you a really, really interesting trade to the upside. So, like for example, right now, I don't want to commit myself to this trade because although it certainly worked, where you have the dip and then you wait for the green candle to come in. You would have come in here, and that would have given you a pretty decent. Not as good an entry as this one. This would have come in you at 501, right? This entry comes in at 507. So yes, you're going to give up the better pricing, but you're also probably going to acquire lower risk trade, right? So there's always a trade-off. In trading, there's never a perfect setup. There's always a trade-off between risk and opportunity, right? So you get a better opportunity, but at a higher risk, or you get a worse opportunity, but at a lower risk. It's always a trade-off. The question of how you want to do it. So this is a kind of a melange, a mix and match of the two, right? So we have momentum, we have pure retrace, we have kind of a half mix and mix structure in all of this, and that's just the regular BFF indicator. Now, what I've done, we've already, is Apex still 90% off? I believe they no longer have 90% off. Yeah, Fred is saying that we have still U of Michigan at 10 o'clock. We'll wait for the 10 o'clock, but that's far away. They do have like a 71% off right now for sure. So if you use our discount code, I'm just putting our discount code, you're still going to get a massive, massive discount off Apex with our code. So I'm not quite sure they still have 90. Because I think that was a Black Friday deal, but you still can take advantage of a really, really good deal on Apex. So give me a yes, give me a thumbs up in chat if you understand the first three trade structures, which is momentum, retrace, half and half, right? Let me know that you guys are processed the basic rules, because then I want to introduce you to the very, very interesting and relatively rare divergence rule. Give me a thumbs up, guys. Anybody want to give me? I want to see some thumbs up emojis over there. So far, Keith is the only one that says yes. I want to see at least 3 yeses before I show you my money trade with this thing, because this thing really becomes such a great money trade once you understand dynamics. No thumbs up? Oh, Shell's give me a thumbs up. All right, very nice. Jawohl. Okay. Cool. I see a whole bunch of new people here. I want to see you guys give me some thumbs up. I don't want to only the guys that make money. Everybody's giving me thumbs up. Are all these are all funded traders. These are all traders who already have money and have been funded by Apex and are trading and are making money. All the newbies, they give me thumbs up because they know the rules. I want all the newbies to give me the thumbs up to tell me that you understand the rules, because it's to you guys. You are the guys that need to understand how to make money in the markets. These guys already know how to make money in the markets. Let's go. I want to see more thumbs up from people I've never seen before. Let's go. Sandy gives me a thumbs down. Thank you, Sandy. Sandy's like been funded about 1,000 times over, but like he gives me a thumbs down just to fuck with me. Thank you, Sandy. I really appreciate that. You can't get purple signals. So sorry. Let me explain to you guys how you get the purple signal. Notice that the BFF's indicator has to be applied twice to the chart. Once for good luck, twice for fun. No, just you got to put it on twice. Once, twice. The first iteration of it is in continuity mode, right? The second application of it, when you go into the settings, is in reversal mode. Once you have it that way and you have that whole setup, it will always show both the greens and the purples, the reds when it goes into the downtrend, and the purples. Okay, so that's how you get both of those signals. It's super easy once you get it. Okay. Oh, all right. I'm starting to see some people who are just visiting us who are finally starting to understand. Okay, so very clean, very super nice. By the way, this trade, the half and half trade, kind of working. In at 07. Trading now 11-12, like basically about $100 trade here in the first 5 minutes had we taken the signal, right? So very cool, all good. Now, I hope you can see this. Let's just make sure you guys can see this, because once you have this indicator, you can absolutely see it. But I want to make sure you kind of see it on the charts. Do you see that this 11L is yellow, that this perhaps this 15L is yellow? You see how this is no longer white but yellow on the charts? Tell me that you guys see that you see it. You see the yellow. Maybe just type in the word yellow to me, just to make sure that you guys can see this on the chart, because obviously I can see it very clear on mine, but I want to make sure that the indicator suddenly turns yellow. What the hell does that mean? Why is that interesting to us? And where's the money in that particular signal? Yeah, Enzo says barely, right? I understand. So I mean, trust me, when you put the indicator on your charts, you can see it very clearly. It's just that I'm trying to broadcast this out. I guess maybe if I get it super big. How about this? Can we see it now? Is that a little bit better? Yes. Okay. I'm really zooming in, right? I'm really zooming in. Guys are saying can barely see yellow. Well, maybe I'll make it orange. I don't know. I mean, I need some kind of a super bright contrast. Remember, this is TradingView. There's a limitation to what we can do as a contrast. Miguel sees yes. Stacy sees yes. Come on, all of you frigging colorblind people. Cheryl says it's faint on her chart. Okay. Well, trust me that it's yellow. All right. I may play around. Maybe I'll make it orange. Maybe I'll make it a different color. I don't know. There isn't, yellow generally is a pretty good contrast color, but maybe we'll turn the whole label yellow. Maybe this will be a yellow label with black in the background. This is, by the way, guys, if you ever wonder how is it that we make money, this is exactly how we make money. We make money by collaborating all the time, right? I come up with ideas, and then everybody tells me how stupid they are, and then we make them better. And once we make them better, it becomes so much more powerful for everybody in the group. So if you're ever interested in like how is it that we trade, this is just every day at BK. I do something, everybody tells me I'm an idiot. I try to do it better. And then and then we do get it better. So maybe everybody give me feedback. Tell me this is obviously was very clear to me. It's not that clear to you guys. Trust me that this is a yellow signal. We'll make it black and yellow, so it's going to just shockingly pop on the charts on Monday. So I'll make an update. All right. Thanks for letting me know. The point being is it's unique. There's a unique value proposition there, and it's informing you of some interesting information. And the information that it's informing you is diversion or divergence. Excuse me, divergence, not diversion. Divergence. Meaning the following: This is the first sign of weakness in an uptrend, that prices are wobbling. This is showing you that it's not, you can't get it up. It's kind of weakening up, it's starting to falter. That's a super, super valuable source of information, because if I have this early warning signal that prices are faltering, I can do what I love to do best, which is go against trend, right? If you're a counter trend trader, what you're looking for is a great signal of picking a top or picking a bottom. Now, trust me, that's a dangerous, stupid idea to do most of the time. But if you have a tool that helped you, it really, really helps you, time those turns. When that turn works, if you can sell the top, buy the bottom, and you're not like a degenerate scalper like I am, where you're only looking for short-term gains, your long-term potential, that is turning a 10-point trade into a 100-point trade, becomes massively more powerful. For those of you guys who like to be patient and really, really milk their trades, this then gives it that extra superpower in terms of changing. Because here's how you would trade this if you were interpreting this information properly. You get the L signal, you get the yellow L signal, right? You wait patiently until prices come back up above the moving average. They rally back up. You're going to assume that rally is false. It's a fake rally, which in this case it is. You sell like, the sixes or the sevens in this case, right? It pops up a little bit against you, but then it drops like a stone all the way for 20 points. Now, this is all on a micro level, and it's all in front of, it's 9:30, the market is opening up, right? So obviously you wouldn't be doing this. And also, the other component that you're going to be looking at very, very much is that what you really want is all of this occurring when the moving average width, when the width of the moving averages is 30 basis points or higher, when they're really, really exhausted to the upside or really, really exhausted to the downside, those turn signals are going to become more and more and more accurate. Maybe the first one isn't good, maybe the second one isn't good, but I can assure you by the third or the fourth one, it's going to be money signal. And as long as you are aware of it and can take advantage of those diverse signals, it's super easy to bank the trade. So we're in New York Open now. Let's take a look at how the S&Ps are trading also. Let's see what's developing on the S&Ps. Everything is very, very tight, right? This divergence signal is dismissed, in my opinion, because the reason why it's not so wonderful is the moving averages are really very, very close to each other. We haven't really, until we get to about 20 basis points or wider, any of the divergence signals are not that interesting to me. However, once we get up to above the 6100, maybe 6110, once we get into those higher levels and we start printing divergence signals, we absolutely want to be trading them, because that's when it's going to give us a chance to trade really great counter trend signals. So in addition to just trading with the flow and with the trend, at the lower levels, we now have this incredibly interesting insight into how to trade it by picking tops and picking bottoms. And the only thing I obviously have to do is make this a lot clearer visually for everybody. But the analytical point is very much made that if at higher levels of separation from moving averages, we absolutely have opportunity here to make some money. All right. Now, having said all this, where the market's finally starting to right itself and pop itself higher. It's not exactly having a huge move here, but we'll watch it. We're starting to get stretched out quite a lot above the short-term moving average versus long-term moving average. If we start going to about 20 basis points wide, and we're sort of trading over here, that's not my setup. But I'm gonna, for my own fun and profit, I'm gonna absolutely short the S&P at around the 102, 103 level, because I am very, very confident. And I'm going to do this at small size. I'm not going to get crazy. The whole point is we start with small size, so we have ample ammunition to resolve our trades. I'm very, very confident that the 05s, 06 is gonna pull back, and I'm gonna be able to get all my money back. I don't, maybe I'll lay it out over here at the threes. So I'm starting my cycle at the micros over here. Again, I don't have a trend signal. The trend signal is, it's well above trend. It's levitating well above the 8-period moving average. So I'm just trying to see if I can clip the top here. If they're going to run the threes, great. If they don't run the threes, fine. I should have probably shorted over here, but it's fine. I'll stay patient. If this corrective move goes all the way down here, then we're going to change our orientation and start to try to buy a trend. Then we're going to have actually trend signals that are legitimate, and we're going to try and trade that. But for now, I'm just trying to pick tops and bottoms because I got nothing else to do here. And I love to do that in the S&P, where it's very, very obvious that you're going to be able to repair the trade if it pops against you. I had the right thought, just missed the entry. I got too greedy. I wanted to have the richest sell. If I had just simply sold here 102s, it already dropped. Would have been a nice clean profit for us. Sandy likes Sandy likes my can't get it up comment. Oh yes, of course. There is it's not a Boris show unless I can make a dick joke. Absolutely, because we are adolescents at heart, right? Enzo says he took the NASDAQ trade to the upside at the 17H level, right over here. Remember I was telling you that this was a good upside trade. He took that trade and that really worked. Now Enzo, by the way, is a classic momentum trader. So he trades the green labels really well. He took that trade perfectly, and that was just a nice clean run up there. Now it's it's levitating up here, also quite a lot above the moving averages. And I'm just got nothing here. Okay, so I'm going to cancel my play for the buy the sell the top. I didn't get a chance to sell to have my little sell the top trade. And now I'm going to be watching this, because if this thing now comes in as a reversal dip, what I'm going to do with you guys is I'm going to actually do the half and half trade. If this thing dips below, right, gives me a red candle, I'm not going to go blindly into this trade. I'm going to enter my first trade on a green confirmation if I get it. I'm not even getting the fucking trade. It's just like the market is all trend, no opportunity for me. So I just have to be very, very patient. Where's the gold doing? Oh, gold is at 50. Whoa. Okay. Gold is actually like, I'm watching gold now, because here's where I love about gold. So gold is 25 basis points wide. It's wide, guys, right? It's wide. So remember I told you about divergence, right? Divergence as a trade. I'm going to be looking for the next yellow signal. If I get a next yellow purple signal, the next red sell, when they start dumping it on the sell, I want to be a buyer at that point. I think this is, gold is going to be an opportunity here for us to trade a counter trend divergence signal here. I could have done it over here. I just, this is market open. I wasn't watching gold. I could have bought the 51s over here, and that would have been a super sweet trade right back there for $200 to the upside if we'd done it. So now I'm going to see if I could find the second divergence signal into the trade. You guys really deflated my balloon. I really thought this was so cool that I colored it, but now you're saying that you can't see it. I'm gonna have to recode this thing to a black yellow, but it will be super visible next time. So he says he took the S&P, made money. So S&P kind of topping out over here, but it's clearly, I think S&P likely going to 105s, and we get up to above 105s. I absolutely want to be, especially if we start really verticalizing up there. I want to start looking for just clean fade trades at that point, at that level. I'm going to switch around between everything that's going on here. NAS is up through the 540s. gold is this is actually telling you that the negative trend. So if I want to trade gold, and we certainly can. We want to trade gold as a sell signal. Absolutely, this is a trend sell signal. Now gold is a little bit wide. I usually like to trade it very, very tight, but this is a reasonable trade. I'm going to trade gold here. Let me make sure I got it right. I'm going to sell this. I'm going to sell this at market. All right. So we should, again, micro contract, right? Micro contract on gold. I sold it at 51.1, and let's see, it's starting to fall. Let's see if I can get some play out of it. What I'm going to do is I'm actually going to move this to probably about plus 15 ticks. Let's see if this thing comes into our trade. You see how I'm very, very comfortable trading both trend and counter trend ideas, depending on where we are on the field of play, which is the chart, and depending on what the conditions and the indicator are showing me. And that's, I think, really important. You can't be just one way or the other way, especially when you're scalping. You need to just have that flexible mindset. Oh, look at that. Boom, done in like 5 seconds flat. That was a nice, clean trade. Always when it's that easy, you always go, I should have done larger size, but it's fine. I'm sticking to my size. So what was this trade from a trend point of view? The label retraced over here, and it was an L label, meaning that we're making lower lows, that the downtrend stays in place. It was around 25 basis point wide, which was wide, but not so wide that it looks like oversold. And it was a super easy trade. It just, we just sold it and dropped like a stone. And, we made money in 2 minutes on this trade. There is support here in this 45, 46 level. But if this thing starts to develop to the downside, we're going to let it go. And only after it starts to show us the yellow labels, or only once it starts failing to make lower lows, are we going to start looking for a counter trend bottoming trade, right? In the meantime, here we are on equity side. Very, very quiet. And remember I said to you, when it comes to equities, especially now, we're like 20 basis point wide. This is buying here is like being over your skis. You have all of this area of potential losses. Because remember, this thing could compress all the way down and still be in an uptrend, right? So that means I have to spend all this money trying to find some kind of a bottom formation here. So I'm not going to do that. I'm going to just kind of do this half and half. Okay, this seems to be giving me a green signal over here. What time? How much? 14 seconds left. All right, we're going to try my half and half strategy again. Small size. If this candle stays green, the cool thing is we're going to wait till the candle completes. I'm not in a rush. Okay, so I'm in. Did I come in? Okay, I'm in. So here's my position. Where am I on the position? Okay, I'm in at 101, I guess. Yeah, I'm in at 101. Target is going to be 103, and the stop is 99. Now, this thing drops through the stop, then we're going to be, we're going to have to be a little bit more patient, try to see if we can repair this trade with a couple of more trades. But maybe this whole half and half move, and we'll move our target a little bit closer because it would have to run through to make fresh highs for us in order to make this trade. So we'll do it underneath the fresh highs to see if we can just take our first trade. Has no risk on it because our first trade is all profit. If it goes, I don't mind making less profit if I can have the confidence of getting the profit done. Sorry, Aaron, and what was you talking about? Kathy wasn't the same as Boris talking the gold trade. I don't know what that comment is from Aaron, but maybe you could refine it and tell us. All right, where am I? So where's my target? My target is 102.50. Let's see if we can get up there. And oops, almost there, and we come back off. It's always the T's, right? Okay. Well, we'll see if this works. But you know, I do like the half and half confirm, because it does save us. You know, we're not blindly, oh, we're almost there. Come on, baby. Come on. It won't sweep me. There's a lot of offers over there. It won't sweep me. It works. It doesn't work. We'll you know, we're going to stick with a plan. Generally, I would have taken the profit already at +4, but I kind of just want to, you know, show you that I'm a stubborn bastard. There we go. Come on. There we go. And we're done. So that was like a nice 6-point trade. So third trade in a row that I've been with you guys. The gold trade worked. The other gold trade worked. The S&P trade worked. Beautiful. Now we start running the 103s. Maybe we're going to run the 105s. So it's going to be interesting to see what happens there. For right now, it's an upward trend. The moving averages are widening out. They're getting to about 22, 23 wide. Once we get to about 30, we want to start looking for failures. We want to start looking for those L signal, yellow L signals as signs of divergence, and then only after that come in and try to short the thing. But for now, it's still pretty much an uptrend. We're going to give this thing to breathe. Nasdaq is really running nicely over here. Nasdaq is probably going to run towards the 600 level. So, you know, we'll let that breathe too. You know, let it go. Everybody who took the momentum trades did great. The thing about this now is, and this is, I know it's very, very tempting. You're like, oh, why aren't you buying this now? We're not buying it now because we have zero technical reason to buy this. Could this go higher? Yes. Could this also drop like a stone and literally drop 100 points on us, and we're just wasting money trying to repair that trade? Yes. So this is not an optimal place to be when you're trading, even if it looks like it's a winning trade right now, because you can also find yourself at a very vulnerable point of buying the high, right? Buying the top tick. We're clearly look at this. We're now above 30. We're now into that red zone where we have come into an overbought territory. Now, can this thing stay overbought for a long time? Absolutely. Strong trends can stay overbought for quite a long time. Looking at S&P, look at S&P. S&P, I said, it's going to go through the 105s, went through 107s. S&P is also getting close to 30 base points. Everything is starting to get bought here, which is great if you're sort of a swing trader. But if you're a scalp trader, this is not the place where you want to engage with the market, right? I talked about this this week about how my mentor Mark Weinstein from Market Wizards, great interview. If you ever, I think it's the first or maybe the second Market Wizards book. You can find it online. You don't even have to pay for the book. Interview with him. This is a guy who literally almost never loses money. But what he does is he never trades anything that doesn't have 80-90% confidence level in his setup. I'm nowhere near that, but that is sort of like the great place where I aspire to be. It's not about, you know, missing all these trades. It's about making sure the trades you take are total. Oops, what did I just do here? Oh man, sorry guys. I hate this mouse. How do I unzoom myself? All right, we're gonna have to go. Sorry, we're just gonna have to go to new charts. Sorry guys. We're gonna kill this chart. Leave this chart and come back into this chart. Sorry. I must have clearly, you know, I have the Apple Magic Mouse, which is the unmagic mouse. I like it. Sometimes you hit something on it and it just like totally drives me nuts. All right, let me go. Auto fits over here. Where are we? Like the 107. Oh, this actually hit the 110s. I should have shorted the 110s just for shits and giggles. But it's fine. I'm gonna leave this alone. Let me make sure I have this properly. Hold on a second, guys. Yeah, okay. I'm in the. I just want to make sure I had my so you guys can watch the trades get executed if I'm on there. Sorry. I'm trying to master the Apple mouse, which is truly an annoying little thing. So we don't have a signal here, but obviously the 109, 110 level, massive resist level here for the S&P. We're well above this. What the fuck? Let's do this. Want to have fun? I always pay the price, but we'll go sell market. All right. I'm short. I got a shitty fill. I'm short 107s. I want it to be short like 109s, but I'm going to just tell you how I fight the market in my stupid little way for fun and profit. Why am I doing this over here? Because it's pretty clear to me, and I'm going to just move this over here. Let's see if we can resolve this. Because there we go. I'm a very comfortable trading against trend, right? If you're not comfortable trading against trend, don't ever fucking do this. But if you are comfortable trading against trend, there are certain moments in the market where it's so freaking obvious to you that you will have a chance to take quick profits. That if you start with a small position, and even if you're wrong, you make money on the next one. And even if you're wrong, you make money on the next one. Very rarely do I ever pick a spot on these kind of trades where I really get into some serious trouble. And the reason why this particular trade worked, even though it's not part of my BFF signal and it's not part of anything else, is because of a couple of key things that actually the indicator does help me identify. What did I see here that made me think, oh, for sure, this is going to be a pretty easy sell? A couple of things. The width of the moving averages was kind of getting up to the 30s already. It's already starting to get overbought. That's just a minor element into my confidence factor. The much bigger element to my confidence factor was that we had the key 110 level, which is anytime we have a round number level, there's a lot of stops over here. There's a lot of natural sell orders at that level, as you can see right now. And if I can get close to that 110 level, especially if the price is levitating well above the moving average. Remember, price always comes back to the moving average. It's the nature of the beast that, you get extraordinarily overbought, and then you just have to have a reversion to the mean. Like everything in life, there's always a little bit of a reversion to the mean. So when I see that pattern, and I have I have the round number price, I have moving averages right there, I'm happy to short this. And if I got stopped out at 110s, 111s, it would have been even higher, and I would have been sold more. I would have been happy to fucking sell more over there and come back and bring it back. That's just my own personal little trade. If you guys like to do the the counter trend trade, but it helps. It put a little money in the till here for the trade. What are some comments? What indicators am I using? I'm using a proprietary indicator that I wrote myself. I'm using a proprietary indicator that I wrote myself that is only available to anybody who trades with us. Let me give you the link if you want to join us. It's not available on TradingView. You're not going to find it on TradingView. It's a hidden indicator, but it's very useful, as you can see, to help me scalp. We scalp every day, all day long, because this is the lowest risk, highest probability way to consistently put P&L. I welcome you. You can watch every single live this week. You can go watch it on replay over the weekend. I made money, as I'm making money right now, over and over again. It's not a lot of money on any given trade, but it all adds up, right? You do $100 a trade. You do 10 trades, it's $1,000 a day. That's my approach. I don't trade for one trade for $1,000. I trade for 10 trades for $1,000, or sometimes 20 trades for $1,000. The point being is, I make money a penny at a time, but in a very consistent fashion. If that appeals to you, this indicator is great for you, and you can use it to your heart's content. All right, so here's the indicator in trend and analysis fashion. So what happens now? We have potentially a trend buy signal, a reversal buy signal, 8H, right? Higher high. You would think, oh, I want to dive into this. This looks like it could be an interesting buy, right? Why is it not? Because the width indicator is flashing red to us. It's saying, dude, you're going to start buying over here. It may work. It may extend higher, but you have all this risk against you. If this thing starts to turn, you're going to have to go 3, 4, 5 trades against the market to try to resolve this trade. And it could be very, very expensive for you to do this. So now, as painful as it is, as profitable as this could be to go to the trend side, I'm not going to do it. I'm not going to do it. And some of you who are trend traders, you're welcome to do it. But the slope, the ascent, everything that's going on in the price action is telling me to be careful. Could this thing go 100 points again, forward? And could I lose an opportunity to make 100 points in the market? Yes, I'm perfectly happy to let it go. That's not what I do. You have to know how you make money. Once you know how you make money, none of this stuff matters because you just focus on how you make money. And on days when guys are just hating the fact that markets are just chopping, and nothing is working, I'm making money. On days when markets are trending, I'm making money when I have some opportunities. On days when markets are gyrating violently, I'm making money. My approach is to try to make money on any market, anytime. But it also knows when not to commit to trades because they're not within your risk parameters. So I'm not committing to these trades right now because they're just too wide to the thing. Market seems sluggish. Market is always sluggish on a Friday, guys. I hate to tell you this, but we always do NFP trading because everybody always wants to trade NFPs, but NFPs are always sluggish. That's the thing. It doesn't matter. We're still making money today. I'm just trying. Hopefully today, I'm trying to be a lot more intelligent about how we're making money, right? So yeah, this is a 9H. This is a momentum signal. You want to go for it? Go, my friend. Go. Could this work? Absolutely. Am I going to go for it? No, I'm not going to go for it. What I'm actually going to go for, as I'm watching this, is I'm waiting for some sign of weakness. I'm waiting for an L signal. I'm waiting for that yellow L signal at this level because that could be interesting to me. Let's see. Oh, by the way, let's take a look at take a look at NASDAQ. Here's NAS. NAS is also really, we're through the 600 level, right? We're just totally up, right? Really big move. And yes, it's tempting, but look at how wide we are. We're 50 basis point wide. This is a super wide gap. Remember I told you that the markets take a long time to kind of respond positively to the news. This is the typical delayed reaction to positive non-farm news, that happen. Sorry, I'm looking for, where's my NQ? Oh, for some reason, everything got moved around because I was using my magic mouse and I fucked up my, okay, let me just organize myself. Gold goes over here. NASDAQ is going to go over here. And mini NASDAQ is going to go over here. Okay, I just need to make sure that all my stuff is aligned. Where's gold? What's gold doing? Gold popped. I didn't get a chance. We didn't get a chance. We made that money on the 6L, 7L. We did not have a divergence signal. Just didn't get a divergence signal, right? So no trade on gold right now. But gold definitely popped. Popped off the trade. This double bottom really held right now. Okay, so we are getting a divergence signal here. You see this 8H? It's a yellow 8H, right? It's a yellow 8H. Here's the conundrum that I face when I'm faced with this particular setup. And this is, there is no right answer to this, but you need to be very mindful of the risks that you would do. So in this particular setup, right, I do have a divergence signal. The next red rip through the moving average to the downside would be my buy signal. I like to buy. However, this is a really critical thing. Typically, I want to see divergence when the moving averages are really wide to each other, because that means I'm at the bottom of the sell-off wave, and I have very little risk to the downside. Right? It's already kind of sold off. Now we've had a big rally to the upside, So could this give me a fake signal, and meaning that this thing could drop another 10 points to this double bottom test? Absolutely. So if I'm going to take this signal, when if it gives me a next signal, I need to be still fully prepared for the possibility of a much wider collapse against me as part of my trading plan, which means I have to trade small in order to be able to withstand any adverse price action, given where I am on the field of play, right? If I was on the field of play over here, my confidence level would be like at 70%. My confidence level here is around 55%, right? So there's two things you want to ask yourself. If my confidence level is that low, do I really want to take the trade? Like, here's a trade. And then if I do want to take the trade because maybe it's above 50, I want to take it at a much smaller size than when I have a confidence level of 70. So just to play along with this, we're going to do this at the smallest possible size at 1. We're going to take it at 1, right? It's dropping. I'm going to play this game because I just want to show you the sequence of how I'm going to try and trade this divergence trade, because it's popping up over here. So I'm going to buy market at 1. Okay, I'm in over here, smallest size possible, precisely because I don't have. Oh, why is this not showing my thing? Okay, hang on a second, guys. Give me just 1 second. Oh, why is it not showing? That's interesting. Oh, because I'm on the wrong. Sorry, I'm on the wrong thing. Okay, here we go. So it's 7 ticks up, right? Moves up a tick. So I bought it over here, very small size, precisely because I don't have a lot of confidence. This may be the big wave up, or it may come back down against me. So if I need to. Sorry, guys, please forgive me. I'm gonna get rid of this fucking magic mouse. This thing is just annoying beyond belief. Sorry about that, guys. Fuck. Here's rule number 1. If your equipment is taking your focus off trading, throw away your equipment. I'm going to throw this magic mouse into the garbage. Fuck, man. I don't know why Apple sucks so badly at so many things, but they really do. Okay, so 10 ticks, 11 ticks, 12 ticks. Let's see if we can take. I was going to take some profits, but fuck. All right. Let's see. 13 ticks, 14 ticks. All right. You know what? Screw it. We'll take the profits that we can. A little bit of money, not a lot of money. But the point being is, I wasn't because of the location of the field, I wasn't confident divergence trade was going to work, so I took a small size. And when you take a small size, whatever profit you take doesn't really matter. But it does work really nicely. Now, if you were completely different, if you're interpreting this as, oh man, this is a total turn on gold, they're going out, they're going to take out the moving average, it's going back up to uptrend. Fuck this, I'm 80% confident on this. You could have gone large. This could have been a $200 trade instead of a $20 trade for you. Whatever you view, the indicator itself allows you the possibility of making money because it gives you the signal. You then choose to determine how the signal works. Jay's telling me the S&P, it's got a yellow label. Thank you, Jay. I was working on the. Oh, yeah. Okay, super. So S&P is at yellow label. This is where I want to be. So now I kind of the only thing I'm waiting on it, and here because I'm a little bit late here, we're just going to go sell market. We're going to sell market on small size. I'm going to get in at a small position. Not a great entry, but I want to be in this trade because if I'm right, I want to be in this trade. If I'm wrong, I'm happy to get in higher, right? So I'm sacrificing sort of execution for the confidence that I'm in the right zone. And that's what you always play with, how confident are you in the right zone versus how confident in yours? Because I'm very unconfident in my execution, but I'm pretty confident I'm in the right zone for a reversal trade, right? We're going to trade another divergence trade there because who was it? Fred. Was it Fred? Who told me who had the yellow? Where's the yellow? Oh, Jay. Sorry, Jay. I'm sorry. I'm just not paying attention to the signals. So you see how trading is very much this mixture of your own confidence level, your own execution level, and the position on the chart. And the way you modulate it, the way you modulate all those variables is through size. This is, I think, like the most interesting thing that I can impart in you. Size is very much a function of your confidence level, right? So I am now small size because I didn't have the great execution. You see, like if I had better execution, this would have been already done. This is like, still putzing around. Could this thing rally up my ass and go to fresh highs? Absolutely. What I'm confident in is that I'm closer to the top than I am to the bottom. I'm not confident in my entry, so therefore I have a small entry, and that's how you modulate your. That's how you adjust the formula. The confidence level is expressed through size. If you just think about that, it's going to make all the difference in the world. Because the biggest issue I think most guys have is they always trade large size regardless of where they are. And then they're always tripping into a bad trade. And they're like, how come I made, I had 10 great trades in a row and then I got killed and I lost everything. All right, I'm going to take the profit here. Again, because I didn't have a lot of confidence in my entry. Fine. I'll take, again, remember, I'm just collecting money on every given trade. Whether it's $20 or $50, it's still money at the end of the day. I am $100 away from 255, which is where I want to be for the week. That's $255,000, right? I started the account at $250,000. I need to make $15,000 to get a $250,000 account funded. It is a bitch. It is so much harder. This is absolutely unnecessary. If you're trading Apex, as we talk about all the time, the money trade, and the one that where I've gotten like 20 of these funded at this level, is the $50,000 account. And a $50,000 account at Apex, all you need is $3,000, and you're funded, right? At a $250,000 account, which is 5 times, you need $15,000. It's a huge barrier. Because the risks, the risk variables aren't going to change much. I'm not going to trade super large, because every time you trade super large, you don't. The drawdown on the 50,000 is 2,500. The drawdown on $250,000 is 6,500. So when you think about it, you got to make 15,000 and you only have a $6,000 drawdown. It's like a 1, 2, 3 against you. You only have like 30 cents of risk against $1 of profit you got to make. Whereas on a 50,000, it's like you have 90 cents of risk. It's $2,500 drawdown against a $3,000 target. If you have 90 cents of risk against $1 profit, it's a much more favorable ratio to you. So I'm just doing this because it's my Moby Dick. I've been doing this for like the last 20 days. I'm probably going to do this through Christmas, just to prove that we can fund the $250,000 account. But it is by far the hardest thing to do, because again, you notice that I'm very disciplined in my approach in terms of size. The smaller the size, the longer it takes. Trust me, if you want to get large size, have a hunch, bet a bunch. You can either get funded or blow like 20 of these accounts in a row, which I've done both. That's not the way to trade, though, because what we teach here and what we focus on, whether you're trading your own account or evaluation, is in real life, you're not going to take, 20 large contracts, like $20 million position on a $250,000 trade, and bet it all on your own money, right? Why would you want to lose all your money in one single trade? But that's essentially what you're doing if you're doing large size. The way to make money on a day trading basis for lifetime, not for a day, not for a week, not for a month, but for lifetime, is to control your size so that you're always staying alive. It's like Weinstein says, you'll never kill a sparrow, because the sparrow will just pluck a tiny bit of bread and fly away. You will never kill it. And that's what I try to be. I try to be a sparrow so the market never kills me. It may take me a long time to get where I want to go, but I will not die. That's my number one target in terms of trading. So hopefully you see that. What are the chances of gold breaking up above the let's take a look. I think gold is coming back down, right? So gold gold did break up. You're right. Gold broke out. No, it broke out. It's positive trend now. Holding back. I told you, this was positive gold. The bullshit that happens in the market that the fuck around positioning that happens right after news is almost always the opposite of what makes sense, right? I didn't want to get into it with, when we were trading early because, I didn't want to, there was a lot of newbie traders and, I didn't want to confuse them into explaining to them that when the news is good and the price action is bad, they're just fucking with you. They're just fucking with you. They're making you lose money because they know that you're going to panic. And then once they take away all your money, the actual underlying trend is going to develop. So yeah, if they're going to cut rates, this is positive gold. Gold is definitely going to rally, but by the time gold rallies, you've lost all your money because that's what they like to do to you. So you have to just kind of understand the psychology on non-farm payroll days. They almost never respond the way they're supposed to because their whole job is to make you lose money before they actually respond the way they're supposed to. It's, just the nature of the beast. So S&P trade, worked nicely, right? We had a move here. We probably actually, I definitely could lay this out over here at the 107s if I wanted to. Let me do, again, small size. Let me see if I can get the 108s out. We'll see if I can get out here. Am I in? I'm trying to sell the 108s. Okay, I sold the 108s. Again, what am I doing here? I'm just repeating the same rinse and repeat process of divergence. Now, again, as I said to you, can this thing, go to 15, 16? Absolutely. Am I confident that I'm going to be able to resolve this trade, even if it verticalized against me? Absolutely. Because what I have here is I have the 9L over here. I sold the okay, so now the first level I'm up. I'm small size. They're probably going to run it against me. I'm happy to wait just 1 second here. Let them run it to like the highs over here. Let me just sell market here at the 10s. Okay, I sold market at the 10s. Let's see if this works. And if they run it all the way through 10s, through the 12s, through the session highs, no problem. Again, I'm on small size. I can do this forever because I'm pretty confident that they're going to compress this down sooner rather than later on these moves. And the width, would I like the width to be 30 to initiate this? Probably yes, but beggars can't be choosers. You can't always have the perfect. I'm good enough in terms of my location that I have a relatively strong confidence level this is going to resolve, right? I'm going to improve my confidence level by just not being so greedy, and let's see if I can make the 6 ticks instead of the 8 ticks on this move. Let's see if we can make a little bit of the P&L here. And there we go. And see, I'm not greedy. I took it. I could have made the full 8 ticks. Yes, I could have done the full 8 ticks. But, again, my job is to survive and fight another day, take a tiny, bite of the bread, come back again, take a tiny bread. You will never kill me if I do this. And in the meantime, I'm like within $90 of the 255 target. Another hour when I'm off screen with you guys, and I hopefully will be done with the with my target for the week, right? So Vincent making an interesting comment here. I want to post this up here. He says, it's algos trading. It's true. It's true. A lot of it is just simply algos trading, right? Absolutely, very much a story. And you need to. It's true. It's nothing. It's not personal. It's not the market is personal. They know exactly the points of pain, and they exploit those points of pain until eventually the institutional money comes in. Also, remember the institutional money, almost by very definition, isn't going to come in until the market opens, right? Because pre-market open, if you think about how equities trade, mutual funds, hedge funds, all those guys, they don't have enough liquidity to kind of really, and also institutionally, Fidelity is not going to trade pre-market. Fidelity is pretty much always going to trade when on the market open, looking for everybody else to conduct business with them. So once the institutional money comes in, they're much more fundamentally focused. They're much more uniform in terms of their order flow. That order flow is going to manifest itself in an upward trend, right? It's another thing to understand about kind of market structure as to why things go against you pre-market that's supposed to go for you, on a fundamental notice. It's fun. It's fun to think about all those things. But what's cool about us is we don't care. We don't care. We love the story. We love the narrative. We know every little angle. We understand what everybody's thinking. But none of that in the end matters. What matters for us is how do we make money given the lay of the land? Where are the opportunities? Where's the opportunity to pick up some bread and pluck it out of the market? And that's what we're looking for every single day. That's what scalping is. Maybe I should use the sparrow as my logo. The bird you cannot kill, the trader you cannot kill, right? Guys, by the way, Jesus, speaking of killing, is anybody following the execution of the United Healthcare CEO and how crazy that story is getting? The guy had marked the bullets with deny, depose, and whatever the fuck what the third thing was, dispute, whatever it was. And then, the pictures that they're showing him in a hostel smiling doesn't look at all like the guy that was in the original photos. I mean, this thing just getting really, really crazy. And he was using some kind of a gun, a very, very unusual silencer gun that they only issued to spy agencies. I mean, it all gets really, really crazier by the day. It's definitely premeditated. I mean, there's no doubt it's premeditated. That the question is like, who the hell is this guy? The picture that they're circulating does not look at all like the guy that was in the original situation. Really, really crazy. Yeah, deny, delay, defend sounds like well, those terms are actually apparently industry practice of how they deny their the claims. I feel terrible for the guy, but I got to tell you, man, the comments, if you guys are following social media, it's just been brutal. They're like, too bad he didn't kill him twice. Just like really, really heartless people. Like, healthcare. I don't blame them. Healthcare in America. Check this out. This is a ridiculous statistic. Okay, I was shocked myself, but I don't know why, because I'm certainly paying it. 2010, average family of 4 annual coverage was $13,000, right? Obamacare comes in, supposed to lower rates for everybody. Do you know what the average healthcare premium for family of 4? I know it because I'm fucking paying it. It's now $25,000. We have doubled in the last decade for worse medical care and everything else. And then when you look at the administrative cost of the U.S. healthcare versus everybody else, everybody is around $300 per person administratively. We are like at $1,500 or some like almost $2,000, like some absurd multiple of 5, multiple of 10. Like if you killed every administrator in the healthcare system, we would all have much better healthcare. It's really, really amazing. It's fascinating. Keith is saying the same in Australia. Somebody's saying that he's pretty good looking compared to the original. Yes, I definitely don't think the guy in that picture is much better looking than the one that was the killer. Also, the guy in that picture, I'm sorry, does not look like a guy who could be a killer. Like that smile. I mean, you never know, but just looking at that human nature, that guy doesn't look like he could kill a fly. Chippy says beats UK. Yeah, no, I mean, there's no good solutions. I agree with you. It really sucks. Healthcare is just a disaster everywhere. But yeah, that's a totally crazy story over there. We have a 12L over here. We should probably get. Let me do one more trade with you guys. It's 1018. Let me get small size. I want to get smaller size. Nines. Let me see if I can get the nines. If I get into this trade, great. If I can't, we'll let it go. Okay. All right. So I'm in at 9. So again, what am I doing here? Another divergence trade here, right? And I'm just basically selling the rip. I'm selling the rip on a divergence trade, hoping that we get a little bit of a pullback here. Now, I'll be honest with you. Is this a great trade? Not so much. I'm like 54% confident in this trade. It's very, very mildly positive confident. The reason why is because we're in a consolidation phase with about 23 wide that could push us pretty high up. Like we could go to the 615, 620 level off this as the next staircase. So I'm going to be a lot more careful in terms of now choosing my shorts off this level, because I'm far less confident in establishing a short at this level than I was here when it was when it was the first consolidation phase. The very fact that we really didn't come down and compress and came down to the moving average tells me that we could very likely could go higher here. That this is just fuel for the fire. So you absolutely have to read the situation as is. There is no permanent recipe for success. It's always contingent. Every probability is a contingent probability. As a matter of fact, it's so contingent that I'm going to just take 4 ticks over here and not take the full 5, just to build my P&L, take myself to just a little bit less than $100 to my target. Because again, what's my target? My target is to make money. My target is not to be absolutely 100% on every setup I have, right? My job is to use all the tools I have to give me the best interpretation of the lay of the land, and then take whatever I can get. Take whatever I can get within the situation that I'm in, because there is no rules. There's only guidelines. That's the last thing I'm going to leave you with. In trading, there are no rules. There are only guidelines. If you live and die by the rules, you will die by the rules, because the rules will always fuck you, because the market is always about breaking the rules. So you have to be trading guidelines. These are all guidelines. That's why we're always manually adjusting everything to the best of ability. The BK save, it's not up to us. Somebody's asking whether it's a 70%. It's Apex that sets the savings, and I think now they've set it down to 71%. So it's not the code is ours, but it's whatever their deal is right now. And I think the deal right now is 71. So it's still a very, very good deal. Still a very, very good deal. I put it to 71 because I think they're at 71 right now. So that's so that's where we stand. Commodity effects getting butchered at the moment. We barely tested 200 SMA on gold this time. Yeah. I hear you. Gold is kind of quiet. So anyways, guys, I got to run. It's been super fun. 2 hours Friday, super fun. You guys want to come join us? You want to get the indicator? You want to come trade with me? Let me put the coaching link in here. Come join me. Every Tuesday we do coaching, and then you get everything organized. I am trading London session, New York session, at least for next week. The week after that, we're probably going to die out. But twice a week now I'm trading, and I'm trading Bitcoin. For those of you guys who want to trade MT5, London CFDs, so much fun. It's a variant of this idea. That we trade. That's really, really cool. So come hang out with me. It's so much fun trading it on Thursday when Bitcoin went crazy through 100,000. It's like, honestly, if I didn't have to run the prop accounts, I would just be trading Bitcoin all day long. It's such a fun instrument to trade. So come join me in London if you want to come hang out with me then. And obviously we will trade New York as always, Monday, Tuesday, Wednesday, Thursday next week. If you come join me, come join me in our room. Here's the just a 1 month link discount to the room. So come join. Oops, I screwed this up. There we go. I'll put it in there. And of course, as always get my friends at Apex lock down those accounts, and have fun with it. The journey continues, guys. A lot of fun. Good week this week. Let me see my P&L here. I'm not going to bother you. I'm not going to, I'm just going to tell you what it is, because it's no reason for me to torment you with all this shit. But this week, remember, my target is to do 1,000 a day. Do I make it? Absolutely not. The reason I don't make it is because I don't have the time. If I was sitting at the screen doing nothing but day trading, I absolutely would have a lot of confidence. But, Kathy has me doing a million fucking things that I don't want to do all day long, because, the boss, like every woman in my life bosses me around to do all the things that I don't want to do. So I am up right now, $1,866.04 for the week. Hopefully I can get it to 2,000. That's not the 5,000 per week that I would love to do, but it's still not bad. $2,000 a week, I'll take it. Maybe it'll take me another 3 or 4 weeks to get this funded. Fine. If I was a $50,000 account, I would almost be funded. So I'm just telling you, if you guys want to do this to get yourself properly done, trade the 50,000. If you want to play Moby Dick like I do, trade the $250,000 account. We'll have fun. Anyways, either way, everybody have a great time. Miguel, thank you so much. Miguel gets the last word here on his thing. Oops. Oh no, wrong one. Here's Miguel. Thank you. BFF is now really, really clear. I'm going to make it even more clear. I'm going to make it black on yellow, so it's going to really pop on the screens. I'll change that around. And thank you everybody for all your feedback. Thank you for trading with us. Another great week. Every single day this week, we were net positive, right? Net positive trading this. And I think I'm getting a little bit better at not, doing fuck around trades, right? Really trying to just be much more disciplined in my trade entries. So thank you guys. Everybody have a wonderful time. Enjoy. Thank you. Bye-bye.